Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous?
Hey, welcome to Modern Investing Techniques, episode 92 for June 30th, 2026. I'm Patrick, coming to you from Vancouver. Today's markets have some interesting setups. Let's break them down. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. Medicare coverage starting tomorrow for obesity drugs opens a direct path for Canadian investors to add healthcare exposure inside a TFSA without U.S. withholding tax drag on growth names. Markets closed with the S&P 500 at 7,440, up 1.2%. The NASDAQ Composite finished at 25,820, up 2.1%. The TSX Composite closed at 34,824, down 0.4% on resource weakness. 15 days have passed since the Roku M&A spread capture position was closed at flat performance. That particular episode demonstrated once again that announced deal premiums seldom expand after the market's initial reaction has occurred. The outcome reinforced key principles around merger arbitrage timing and expectations. Canadian investors following similar spreads can draw lessons from the lack of further upside following the announcement. The flat close highlighted the importance of realistic premium assessments in such situations. Monitoring subsequent deal spreads helps refine future entry and exit decisions in this strategy area. Healthcare-led sector moves on the Medicare expansion news, while energy and materials lagged. The Bank of Canada decision window remains open into July with no hike priced in, while the Fed's next meeting sits 3 weeks out and markets are discounting one cut. European inflation warnings from Bundesbank President Nagel and ECB's Wunsch point to sticky prices keeping rate cut expectations in check. Canadian investors have long favored income-focused ETFs because the tax-free growth inside a TFSA turns modest yields into compounding machines without annual tax drag. Today's Globe and Mail piece on True Yield, Strong and Free highlights how covered call and high dividend ETFs deliver 6 to 9% distributions that would otherwise trigger immediate taxation outside registered accounts. Implementation starts with screening for ETFs holding Canadian equities to avoid the 15% U.S. dividend withholding that still applies inside TFSAs. The strategy has worked best in sideways or modestly rising markets where option premiums remain elevated. The main risk is NAV erosion when underlying holdings decline sharply. Track contribution room monthly through your brokerage and set alerts for any distribution classified as return of capital, which reduces adjusted cost base. Use the ETF screener on Questrade or Wealthsimple to filter for management fees below 0.75% and trailing 12-month yields above 6%. This approach pairs well with our earlier emphasis on valuation discipline because it keeps positions sized appropriately for the income component. If you want to try this, open the Wealthsimple or Questrade ETF screener, apply the tax efficiency toggle, and sort by yield while confirming the underlying holdings are Canadian listed. Our practice investment of the day is a simulated weekly hold on Eli Lilly. The ticker is LLY on the NYSE in the healthcare sector. The strategy is a policy-driven catalyst entry on expanded Medicare coverage for GLP-1 obesity drugs beginning July 1st. The AI analysis flags the catalyst as Medicare Part D plans beginning to cover obesity medications for the first time, unlocking millions of new patients for Novo Nordisk and Eli Lilly. The technical setup shows the stock trading above its 50-day moving average on daily charts with volume near the 20-day average. Nearest support sits at the 20-day moving average, while resistance is the recent swing high. Risk assessment notes that broader healthcare policy reversal or disappointing sales data could pressure the name, so the stop loss is set at 8% below entry. The target is plus 4% to plus 8% over the 5-day hold window if coverage news drives sustained buying. Confidence level is medium because of the strong fundamental catalyst from the policy change, but only a single factor setup without volume surge confirmation yet. This trade demonstrates how regulatory or policy shifts create measurable demand expansions that can be quantified through patient pool estimates rather than pure price momentum. Listeners learn to size positions smaller when the catalyst is binary and policy dependent. This is a simulated trade for educational purposes only. Yesterday's flash trade on MU entered at $1,233 at market open and exited at $1,213.56 at market close. The position lost 1.58% or $15.77 on a $1,000 simulated stake. The earnings revision catalyst reversed once broader cost concerns resurfaced. The single-day reversal produced negative alpha relative to the index move over the same window. This outcome confirms that single-day momentum entries require tighter risk controls. The lesson is to require closing price confirmation before declaring any catalyst trade complete. That rule came directly from reviewing the reversal on this name. The Wealthsimple ETF screener filters Canadian-listed ETFs by yield, MER, and asset class while showing exact contribution room impact inside a TFSA. Intermediate investors use the tax efficiency toggle to avoid U.S. withholding exposure. Access it directly in the Wealthsimple app under Research, then ETFs at no extra cost beyond the standard 0.4 to 0.5% management fee on the platform. The Interactive Brokers TWS scanner builds custom scans for stocks with upcoming earnings revisions or sector-specific news flow using real-time data. Users set alerts for volume spikes above the 20-day average. It is available on the desktop platform with a zero commission structure for Canadian and U.S. equities. The stock Digital Realty declined 4% following its decision to acquire a $3.5 billion position in Blackstone's Virginia data centers. This transaction involved 3 specific data center facilities located in Virginia. The move highlights ongoing demand for artificial intelligence infrastructure despite the immediate market reaction. Financing concerns contributed to the share price dip, even though the underlying sector trend remains positive. Investors are advised to place DLR on their watch list for potential opportunities. Scaling into the position should only occur after the stock closes back above the level seen before the announcement was made. Monitoring volume and price action around that threshold provides additional confirmation. Abivax, a French biotechnology company, experienced a 30% surge in its share price. The increase followed the release of new trial data concerning its experimental medicine targeting bowel disease. This example shows the impact that binary outcomes from clinical studies can have on stock prices in a single trading session. The shares jumped specifically on the fresh information about the bowel disease drug called obefazimod. Market participants should refrain from purchasing immediately after such a gap up in price. Instead, waiting for the price to retest the 20-day moving average offers a more measured approach to any potential entry. This method helps avoid chasing momentum without additional confirmation. Lithium prices experienced a sharp rebound in recent trading sessions. Experts continue to caution that the long-term outlook for this commodity carries significant volatility. Strict position sizing remains essential when considering exposure to lithium investments. Current holders are recommended to maintain their existing positions at present levels. Adding to those positions should be deferred until prices move above the previous quarterly high and stabilize there. The dramatic nature of the price recovery does not alter the inherent risks associated with this asset class. Careful monitoring of price stabilization provides the necessary signal for any future adjustments. Our simulated portfolio across 41 trades shows a 51% win rate with 21 wins, 13 losses, and 7 break-even outcomes. Cumulative profit and loss stands at $263.15. Cumulative alpha versus the NASDAQ across 30 benchmarked trades is plus 11.0%. Average return per trade is 0.64%, with the best trade at plus 20.11% and the worst at minus 11.80%. The current streak is one loss, and the AI analysis continues to adjust position sizing based on catalyst confirmation patterns observed so far. Imagine you bought shares of a U.S. growth stock inside your TFSA last month at $48.50. The order filled cleanly, yet you later discover the 15% withholding tax on any future dividends quietly reduces the compounding power you thought was fully tax-free. TFSAs shield Canadian source income and capital gains completely, but U.S. dividends still face that withholding unless held through a Canadian-listed ETF wrapper that avoids direct U.S. exposure. Most retail investors do not realize contribution room resets only on January 1st and that overcontributions trigger a 1% per month penalty until withdrawn. Professionals always verify the exact unused room on the CRA's My Account portal before any large purchase rather than relying on brokerage estimates. The biggest mistake with TFSAs is treating them like high-interest savings vehicles instead of long-term compounding accounts. Instead, always allocate the highest growth assets you can tolerate to the TFSA first. Then use non-registered accounts for income-heavy holdings that generate taxable distributions. Open your TFSA holdings list, identify any U.S.-listed stock paying dividends, and calculate the 15% withholding tax you would have paid on the most recent distribution. Move that position into a Canadian-listed ETF equivalent before the next ex-dividend date. Tomorrow, I will watch how the first day of Medicare obesity drug coverage affects volume and price action in the names we discussed. That's modern investing techniques for today. If you found this useful, share it with a fellow investor and subscribe wherever you listen. Check the resources page for tools and platforms we discussed. We're back tomorrow. Keep learning, keep investing. And if you'd rather watch than listen, find us on YouTube at NARA Network. Links in the show notes. And before you go, this show is part of the NARA Network, a family of daily podcasts on tech, science, and markets, each one a short, sharp briefing you can finish on the commute. If today earned its place in your feed, here's your next listen. Environmental Intelligence, the Environment and Climate Policy Brief for Canada. Find every show free at naranetwork.com. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.
Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life like? What's your purpose? When's your birthday? What's your sign? Are you down right now? Are you stuck up in the past? Are you still thinking about